Traders, Cousin Benny coming to you from theclosingprint.com on March 31st, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, breadth, sentiment, and indicators which are mostly pointing to bullish follow-through this week, while fear continues to dissipate and the US dollar moves higher. We had gold in a range, of course, with copper bullish. That's good for the economy and for equities generally, with West Texas crude and Brent higher for 14 weeks straight, continuing to push towards that $70 a barrel mark. The heat map is improving with biotechs, industrials, technology, materials, staples, healthcare, and consumer discretionary all doing well. Last week, the XLY-XLP ratio was bullish for equities. And we have international markets improving with India, the Netherlands, France, and Italy. We'll look at some IBD 50 names that are showing relative strength and some MarketSmith Growth 250 names that showed up on the relative strength scan as well as the blue dot scan. Chinese stocks are looking good this week, so keep an eye on those. We have Bukowski with 505 green, with a CPI signal half green since March the 29th, Friday, at 81%, with 7 bearish patterns, 30 bullish patterns, and 456 patterns waiting for a breakout this week. Bottom line, the markets are looking pretty bullish despite the negative rhetoric that we're seeing out there and negative commentary. The stocks and markets continue to press higher on the weekly time frame, which we are about to review. Here is the spiders on the weekly time frame. Much has been made about window dressing for the end of quarter. While that is definitely something we watch, it's only one factor in all of the indicators that we watch. In this case, weekly continues to press higher, taking out the previous weekly highs on a closing basis. We have RSI above 50 and rising. There's a possibility that we should and could break out this week as we consolidated the recent gains from December into last week's highs in time versus price action, meaning we didn't pull back, we moved sideways instead. That's bullish in itself, as volume did increase over the last 5 weeks above average, and we finished with MACD above the signal line, histogram building a flat to slightly higher bar last week, which is telling us the bulls are in control, and it would take quite a bit for the bears to wrest control this week as the momentum carries forward. The 3,000 stocks that trade on the New York Stock Exchange as a whole, we can see that new highs remain above the zero line and are outperforming new lows. As histogram bars continue to push higher, the moving averages stay above zero. On average, the momentum continues with the bulls. As we can see, we're producing higher lows. We just need to take out this high this week as NYAD continues to confirm that more advancing stocks are beating out decliners as this ratio moves higher. So this is bullish for equities in the short term, coming out of consolidation or a range-bound condition over the last few weeks. We can see similar indications from the Wilshire 5000, another broad measure of market participation. Weekly time frame thrusting higher, sideways over the last 5 weeks, consolidating in time versus price, RSI above 50. More importantly, the cycle is up, has yet to even change one iota in terms of degree of incline. So until the short-term rate of change indicator begins to slow, this is telling us the momentum is clearly with the bulls, with this chart more bullish than bearish at the present time. Look for follow-through this week in the US indices. Here is the sector heat map. We can see from left to right each Friday. This is updated. We've gone from deep reds back here in December. We've transitioned from chartreuse to greens and lime greens, yellows, and a little bit more reds 4 weeks ago into last week, which is starting to change and look less bearish. And with the international markets, we're seeing the same thing. Of course, India stands out here with some of the other European and South American countries improving in the short term. We'll go through the sectors very quickly. Just pay attention to where price action is relative to standard deviation 1 and 2 and the trend. This is IYR real estate looking fairly bullish. IYT transports, this needs to get above the 200-day, break higher. Volumes increasing, MACD's turning. XBI biotech moving higher above the 200-day, looking for this to turn higher, increasing volume, MACD turning. Materials above the 200-day. XLC communications lagging a bit, so look for Netflix and Facebook to move higher. Those are the big weighted names in the group. Generally, most of these sectors look very strong. Energy is not one of them. It slacked off a little bit last week. But financials are improving. One of the lagging sectors that needs to catch up and get above the 200-day. So that's why we're not trading banks in the short term. Industrials, though, do look good. Boeing is climbing. 3M. All of those looking fairly bullish. Tech, of course, performing well, taking out the previous highs of the day. In standard deviation 1 and 2, MACD's turning. Volumes increasing. We've got XLP. Nice bullish trend. XLU, bullish trend inside of standard deviation 1, bouncing off the 20-day. All of these sectors having an impact on the S&P 500, of course, and the spiders. Looking for healthcare to improve this week. XLY, consumer discretionary, moving higher. And of course, XLY, XLP ratio, bullish for equities. This was a signal back in September, October when this flattened out, telling you institutions were becoming more defensive in their positioning. Now it's the exact opposite since January, and the moving averages haven't turned or inflected at any point, as you can see with the sectors we just reviewed. This is basically bullish for equities for continuation going forward in the short and intermediate term. Automatic data processing, following through on a breakout, just a little bit outside of the buy zone, the blue area. Looking for that maybe to come back a little bit this week. Relative strength line climbing, volume increasing. Last earnings was a nice beat. Cadence Design, CDNS, that one just continues to push higher. CyberArk, as mentioned with Palo Alto, looking for follow through on this one as well. Luxury brands like Estee Lauder, Tiffany, Ralph Lauren, etc. These should continue to move higher. Coach, still in the buy zone. Estee Lauder breaking higher. Dover Downs, gaming, entertainment, big gap up on Friday. A lot of these gaming stocks are looking more interesting, with Las Vegas Sands at the 200 period looking for a push higher. I believe they said that they've increased their dividend, which we can see on this MarketSmith weekly chart at 5.1%. Just confirm that. Annual sales and earnings, Macau having an effect as well as annual sales and earnings continue to climb. Stocks like EVA, big cup pattern, looking for a breakout. Buy zone overhead. If it does break out, looking for follow through. Note sales and earnings are climbing, nearly doubling from 2 years ago. Going forward. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. Be sure to check out the additional names on the IBD 50, MarketSmith Growth 250, and Relative Strength Blue Dot Scan candidates that we pointed out in the opening monologue for additional trades going forward. We'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. So look for that in your inbox. Otherwise, have a great weekend. Enjoy the rest of your day with your family or friends. I hope this helps. Have a good one. I'll talk to you soon.